A gold-backed currency limits the ability of the politicians to counterfeit. It limits their ability to spend money and leave the bill for future generations.
In that environment, you've talked to us several times in the past about, we've had talks entitled things such as "When I Will Sell My Gold" or things like that. You've talked to us about the underlying principles of negative real interest rates, debts and deficits, etc. There's a question about the action. A lot of people are talking about the actions of the Federal Reserve versus the direction of interest rates. Since you mentioned that as one of the underpinning negative real interest rates as one of the underpinnings of what makes an intrinsically worthwhile asset of interest to you. Gerald Lee asks, would a gold-backed currency eliminate interest rate risks and policy tools?
From a theoretical perspective, yes. But a gold-backed currency, a gold-backed official currency, will never occur. It's easy to understand why. People are attracted to politics because they're attracted to power. They want to be the arbiter between the ambitions and the wants and needs of other people. A gold-backed currency limits the ability of the politicians to counterfeit. It limits their ability to spend money and leave the bill for future generations. Anything in politics that limits the power of politicians is a non-starter. So, while yes, from an academic point of view, a gold-backed currency would eliminate the interest rate risk. But the probability that a gold-backed official currency would ever exist is, in my humble opinion, nil. Now, I need to say that I've begun to work on my mind a bit, in the sense that I used to calculate my income and expenses, my balance sheet and my financial statement, my statement of earnings personally, only in dollar terms. I've started to calculate my own finances on, if you will, a separate ledger. And I now, in addition to measuring my net worth, my debts, my incomes, and my expenses in dollars, I measure them in grams of gold. So in a sense, Dunnigan, I've devolved a little bit to my own personal gold standard. Gold can be a private currency. And I suspect that with the work that the World Gold Council, the Silver Institute, and others are doing, that utilizing blockchain and distributed ledger technology means that increasingly gold and silver will become real currencies again, simply not sovereign currencies, simply not government-backed currencies, but rather private currencies, which is what they were always intended to be.
Yeah, privacy is one of the casualties of the information era, it seems, unless we do specific actions which are countercultural to try to preserve the shreds of privacy that we have left. Again, you've talked to us in the past about maintaining cash liquidity, bullion liquidity, and this idea of being prepared for opportunities or potential crises. Never know. And it echoes the roots of our channel about preparedness. There's a question here about preparedness. Gary Farmer is contrasting gold and silver and the value of accumulating those versus other more utilitarian assets. He says, I have no use for gold or silver, can't eat it, no merchant accepts it as payment. Unlike fiat currency, which is acceptable around the world, I'm buying spare parts, batteries, tires, nuts, bolts, food, water, shelter, brass, lead, and the means to deliver it, clothing, shoes, boots, gloves, etc. Can you talk to us briefly about what role, with an eye towards preparedness, towards the unknown opportunities or risks that lie ahead, precious metals or precious metals related equities may still hold in someone's planning?
Big question. First of all, I like parts of the questioner's strategy, which is to say, diversifying his savings into non-traditional assets, which he believes might have value and which he might be able to exchange for other items of value which he may need in the future. I think that's a perfectly viable strategy. I'm for any form of savings, Dunnigan, as long as people save. You know, I remember early in my career having to go to a lot of frontier markets to look at natural resource projects. And the way people saved, if they were afraid of the currency, varied. In Africa, as an example, people would buy spare sheets of steel roofing, knowing that their currencies were ridiculous, knowing too that storing food meant that the food deteriorated over time. So, from the first thing, uh, storing items, if you feasibly can, that have value, where in particular you know how you might be able to market them, is a viable form of saving or speculation or a business. It's an unlicensed store, not a bad thing. Gold and silver are a good thing too. I regard them as liquidity, but they are volatile liquidity. The holder of liquidity in gold or silver must make a deal with himself right now that if the nominal value of the gold and silver falls, but the price of other assets that he wants falls more, he or she will be willing to sell the gold and silver, despite the fact that they're down in nominal terms, to use that liquidity to buy other assets. If the holder of gold and silver isn't willing to use gold and silver as liquidity, it is not, in fact, liquidity. It's important to understand that. The questioner notes, too, that for practical purposes, in terms of day-to-day transactions, that fiat currencies work better than material goods and gold and silver. And I agree with that, too. But I still understand the value of gold and silver for part of someone's liquidity to the extent that more conventional assets are falling in nominal terms faster than gold and silver. I continue to hold most of my liquidity in US dollars for the simple reason that it is the most interactive form of liquidity in the world, which is to say, it is the most liquid of the fiat currencies. And it also is the currency that denominates the economy that I live in. I understand perfectly that I'm buying a US 10-year treasury yielding, 3%? Which means that my purchasing power is declining by 6% compounded annually. I consider the negative real interest rate as an option premium so that I can have the cash to take advantage of any dislocation, or to use your words, to be prepared for any dislocation in capital markets, a circumstance, a liquidity crisis, a crisis in confidence like we experienced in 2008, could mean that shares in businesses that I would like to buy would fall by 50 or 60%. Having the ability to take advantage of that situation rather than being taken advantage of by that situation is one of my own definitions of preparedness.